Hello everyone, I'm John with JP Strategic Investments, and today I'm going to go over my predictions for Rocket Company's Q4 earnings report. I'll go over everything from whether or not they bought back any shares to their new partnership and any other major announcements that I think they might make during the earnings report. Before I jump into this though, if you could take a quick second just to like and subscribe to support the channel, I'd really appreciate it. And with that out of the way, let's dive right in. So first of all, I want to go over some general refinance and lending data that could give us a better picture of how Rocket companies might have done in this quarter with their mortgage segment. So both LBA Ware and Black Knight both estimate that there were roughly the same amount of refinances and loan originations in Q4 of 2020 as Q3. Although rates were about a quarter of a point lower in Q4, so if Rocket did the same amount of loan originations in Q4, we can expect revenue and profit to come in slightly lower than the last quarter. That being said though, Rocket might have actually done more loan originations in Q4 even if the total loan originations in the US were roughly the same as the last quarter. This is because they could have gained even more market share. Rocket has been steadily gaining more and more market share over the past several years, and just in the last 2 years alone, their market share has doubled. One of the ways that they're trying to speed up this market share growth is by an increase in marketing. And speaking of Rocket's marketing, I think we'll see a pretty decent increase in marketing costs this quarter as a result of the Super Bowl and just a general increase in advertising from Rocket that I've noticed over the past several months. Also, by the way, I do think the cost of the Super Bowl ads will be split between Q4 of 2020 and Q1 of 2021, as Rocket likely had to put down part of the money up front to reserve the spots and then pay the remainder of the money after the ads actually aired. I think this is a really smart move though to increase spending on marketing during a continued surge in refinancing. As many of you know, Rocket's refinance recapture rate is the highest in the industry by a huge margin. So the more customers they can steal during a surge in refinancing, the better, because those customers will likely stay with Rocket in the future. And while this cost might cut into the net income a little bit this quarter, I think it's a great move long term and should accelerate their market share growth even further. Now let's get into their share buyback program. Last quarter, Rocket announced a $1 billion share buyback program that will be in effect for 2 years. Now, there's been a lot of speculation as to whether or not they've actually begun to buy back shares, especially with the volatility in the stock in the last half of January. Well, I've been digging into this a lot recently, and in my opinion, Rocket has never been legally allowed to buy back any shares since the announcement of the buyback program. This is because of the SEC rules surrounding share buybacks and insider trading. And one of those rules is that if a company buys back shares at a time when the company has material information that has not been released yet to the public, then the company could be charged with insider trading violations. So let me explain what this means and why I think it applies to Rocket. So material information in this case refers to any information that, if released to the public, could likely affect the stock price. So what the SEC is saying here is that if a company knows details about any major news or changes with the company that they haven't made public yet, then they cannot buy back any shares before the release of that information. Well, as we all know in the last earnings report, when they announced the share buyback program, they also teased a new partnership with, quote, one of the largest financial services companies in the world, although they said that they wouldn't release the full details of the partnership until early 2021. Well, we have yet to hear of who this partnership is with and what the details of the agreement are. As far as I can tell, this clearly qualifies as material insider information and should prohibit them from buying back any shares until this information is made public. This should be really encouraging to investors because now we know that not only have insiders not sold any of their shares after the lockup expiration, but the company still has the ability to buy up to $1 billion of their shares back. Both of these things are great signs for the stock going forward. Now, speaking of this new partnership, I don't want to speculate too much as far as who the partnership is with or what the details of the agreement actually are. But I will say a strong case has been made that Warren Buffett's Berkshire Hathaway is the financial services company that Rocket will be announcing. Not only are Dan Gilbert and Warren Buffett good friends, but the wording of the last quarter's earnings report says that this company is one of the largest financial services companies in the world. Well, according to Google, Berkshire Hathaway fits that description very well. Now, before I get a ton of comments on this video that I'm just perpetuating false hope, let me clarify that I'm in no way saying that this is a guarantee that Berkshire Hathaway is the partner that will be announced. All I'm saying is that a case can be made that Berkshire Hathaway fits the bill. Another important thing to note here is that it's very possible that whoever the partner is, they could be buying a large stake in the stock. This wasn't explicitly mentioned in the Q3 earnings report, but it makes sense that a partner, especially one that is a financial institution, would want to take a stake in Rocket stock. For one, if they are partnering with Rocket, then they likely believe in Rocket as a company. And second, if they thought that the partnership would be beneficial to Rocket's business, then it would make a good investment. Now, as I said before, there's no guarantee of this, but if it does happen, in my opinion, it's also very likely that the stock will come directly from Dan Gilbert's Class D shares. And I know the different classes of shares and holding companies can be very confusing with Rocket, so if you guys do want me to do a video specifically explaining how all that works, let me know in the comments below. For now though, I'll give you the quick pros and cons of what this would mean for Rocket stock. The downside to the partner purchasing Class D shares directly from Dan Gilbert is that it won't be on the open market and won't push the stock up, at least from a direct purchasing standpoint. The upside though is that it removes some worry that Dan Gilbert has a huge amount of shares that he can continue to sell over time, which would hold the stock down. Dan Gilbert essentially owns somewhere around 80% or so of the overall shares outstanding, so theoretically he could sell large amounts of shares over time while still maintaining a large ownership stake. This would crush any momentum that the stock is able to build. If Dan were to give, let's say, 15 or 20% of his position to a new partner, this would greatly reduce worries that his future selling would be holding the stock down. Finally, let's get into whether or not Rocket could announce a dividend in the earnings report. First of all, if they are going to announce a dividend, this would be one more piece of material insider information prohibiting them from being able to buy back any shares. Now, as far as whether or not they will announce one, I'm thinking they're going to hold off on any dividends for now. My main reasoning here is that the main purpose of a dividend is to entice investors to buy the stock, and arguably Rocket needs that at the moment. That being said though, I think Rocket is going to wait and see how the announcement of their new partnership is going to affect the stock, because that alone could create a decent amount of demand for the stock, especially if the partner is Berkshire Hathaway. If I was Rocket, I wouldn't pay a dividend if I didn't need to entice investors. That's a waste of money. I do think that Rocket will announce a dividend sometime in the next 2 years or so. In fact, I think the most strategic move for Rocket here would be to wait until interest rates begin to rise, and then either use buybacks or a dividend announcement to counteract any large amounts of selling. Now, as far as how all of this will affect the stock, that's where it gets a little tricky, but I'll do my best to make some educated guesses. First of all, I think it's important to note that the short interest on Rocket stock has dropped significantly from just over 40% in mid-January to now only 30% as of the end of January. Some might say this is bearish because it reduces the possibility of a short squeeze, although I think it could be a good sign because it means that institutions are repositioning on Rocket and moving more towards long positions instead of short-long positions. Further evidence of this is several recent 13G filings that we've seen increasing ownership stakes in the stock. This combined with the decreasing short interest in the stock leads me to believe that these institutions are repositioning their holdings in Rocket in a bullish way. This is obviously a good sign for the stock, as short selling and manipulation have been keeping Rocket stock from building any strong momentum since its highs in late August. I think that this, combined with the announcement of their partnership details and strong market share growth, could be enough to get this stock going and push it to new highs. I hope you found this analysis helpful, and if you did, please consider liking and subscribing. Other than that, see you next time, and have a great day.